If you want to be a part of the conversation before it happens here on YouTube, click that link in the description to join the free Courtside Financial Discord. What's going on, everyone? My name's Obi, and welcome back to the Courtside Financial Podcast, the podcast where we talk about business and technology. I tend to focus on the EV industry in China, and so in today's episode, we're going to be talking about a culmination of auto insurance, the new energy vehicle automotive industry, and technology. So it'll be a super interesting episode as always. We're almost at 8,000 subscribers. If you happen to stumble upon the channel, make sure you hit the subscribe button. Whether you're new or returning, make sure you hit the like button. Make sure you click the notification bell icon, share the video, leave a comment down below. All your engagement really does go a long way in helping out the channel, helping us to reach a broader audience and serve more people. So without further ado, let's get into today's episode of the Courtside Financial Podcast. Let me set the stage for you today with a narrative that's going to blow your mind. We're not just talking about incremental changes, we're witnessing a fundamental reconstruction of how automotive risk is understood, priced, and managed. And at the center of this transformation is the rapidly evolving new energy vehicle market. When we look at raw numbers, it becomes immediately compelling. From January to November 2024, the Chinese automobile industry has logged a staggering 808.1 billion yuan in insurance premiums. So here's where it gets truly interesting, because this represents more than just a financial figure. It's a reflection of a profound market transition. Historically, auto insurance has been the bedrock of the property and casualty insurance industry, consistently accounting for more than half of the sector's premium. But the growth dynamics are still shifting drastically. While the auto insurance industry saw a modest 4.83% year-over-year growth, which was a slowdown from the 5.64% year-over-year growth in 2023, the new energy vehicle market is experiencing a different trajectory. New energy commercial auto insurance premiums have absolutely exploded. They reached 1.177 trillion yuan in 2024, representing a 52.93% year-over-year increase. This isn't just growth, it's a seismic market restructuring, pretty much rewriting the rules of traditional auto insurance. So what's driving this transformation? Well, it's the perfect storm of innovation, changing consumer behaviors, and strategic regulatory intervention. The Chinese government isn't just observing this change, they're actively architecting it. In September 2024, the State Council issued critical guidelines focusing on commercial insurance for new energy vehicles. Then, in January 2025, the State Administration of Financial Supervision, amongst other departments as well, released the first ever guiding opinions on new energy vehicle insurance. So these aren't bureaucratic documents, they're strategic blueprints for market evolution. The regulatory framework is pushing for more market-driven pricing mechanisms. They're encouraging insurance companies to develop more sophisticated and risk-aligned pricing models. The goal is to ensure that insurance pricing more accurately reflects the risk profile of each consumer. Here's where things get even more fascinating, because new energy vehicle insurance isn't just traditional insurance with a green label. These vehicles represent an entirely different risk ecosystem. According to industry analysts, new energy vehicles have a 28% higher premium than traditional vehicles, with a claim rate that's also 5 percentage points higher. And that's because these aren't just cars, they're rolling computers with complex technological ecosystem. Battery systems, advanced electronics, unique driving patterns, all of these introduce variables that traditional auto insurance companies struggle to comprehend. So yes, insurance companies are pretty far behind on this, but they're building evolving models to that more understand these products. For a company like NIO, this represents a strategic opportunity. The incorporation of an insurance brokerage back in 2022 wasn't just a side project for NIO. It was a visionary move anticipating exactly this market transformation. The June 2024 partnership with Cheche Group was an example of exactly this strategic thinking. By creating a digitalized, streamlined insurance process tailored specifically for NIO owners. NIO isn't just selling cars, they're creating a more integrated ecosystem. Their approach goes beyond traditional manufacturer models, positioning them more as a technology service provider than just a mere automotive company. The digital revolution in auto insurance is also equally remarkable. Online insurance platforms saw a 70% year-over-year increase in 2024. Also, the user profile is changing dramatically, with users between 30 and 45 years old, predominantly from the internet generations, driving this transformation. Insurance companies are simplifying processes, reducing steps from 29 to just 14 in most regions. Platforms like Tencent's microinsurance have seen big booms. Active price inquiries increased by 50% with a 90% closing rate. Traditional insurance giants in China aren't sitting idle either. The old three property insurance companies, PICC, CPIC, and Ping An, they continue to dominate, holding a 69.1% market share. That's as of September 2024. But the new players, as we mentioned, are beginning to enter this arena. Companies like BYD Insurance, who have been operational for just 5 months, have already insured 118,000 cars with over 550 million yuan in premium. Foreign entities like BNP Paribas, Tianjin Property Insurance are preparing to enter, and with them they bring sophisticated global risk management expertise. Now, projections for 2025 are extraordinarily optimistic. The China Automobile Dealers Association predicts that sales for 2025 will exceed 23.4 million units, with new energy vehicles reaching a 57% penetration rate. Internet insurance is expected to grow 15 to 20% annually, with auto insurance becoming a critical segment. So we're not just watching an industry evolve, we're watching a technological and economic revolution here. The convergence of technology, automotive, and digital platforms is creating something entirely new. For investors, technologists, and just enthusiasts, this is a fundamental reimagining of transportation, risk, and service ecosystems. Anyways, thought I'd share some news on the insurance industry. It definitely does play into what we talk about all the time on this channel. So I hope you found this useful, helpful, insightful, at the very least entertaining. If it was any of those things, click that subscribe button, hit the like button, notification bell icon, comment down below. Happy Sunday. I hope you guys all have a good day and a good start to the week tomorrow. See you guys in the next installment. Bye.